Yo, what is going on, guys? Welcome to the very first episode of the Quarterly Theory Bootcamp, episode 1. I do plan on doing many episodes, so the more episodes you guys want to see, let me know in the comments down below what topics you would like me to cover inside of the bootcamps. I've already got probably around about 15 video ideas, and essentially the goal of this bootcamp is to take you guys from zero to extremely knowledgeable in quarterly theory. Of course, I was a student of Day in his 2024 mentorship. I took thousands and thousands of notes. Let me just show you guys real quick. As you guys can see, Day QT mentorship 2024. The word count at the bottom, 30,000 words. Okay, and I'll quickly scroll through it just so you guys. Okay, you can see that. Okay, so I was a student of Day, so I do know what I'm talking about. I got the concepts firsthand from Day. Of course, everything I am going to be speaking about, for the most part, was created by Day, Trader Day, so shout out to him. And yeah, with that being said, guys, let's just go ahead and jump straight into it. Not really going to be editing these type of videos, just really raw, just explaining everything how it should be, showing you guys examples on the charts, and yeah, showing you guys a few graphics, pictures, examples before we get into the charts, so you know exactly what we are talking about. So, first episode, quarterly theory, time cycles, and quarters, right? Everything based upon quarterly theory stems upon this, right? So with this in mind, what we do is essentially divide everything into quarters. So every single piece of time, every single candle can be divided into 4. And this is what we do to get the best, analysis of each quarter and of the higher time frame candle that we are trading. So for example, a daily candle can be divided into 4, and then we can view each of those quarters, and each of those quarters has its own function, right? So here's a little screenshot here first. Feel free to screenshot this, take note of this, okay? The quarters have names: quarter 1, quarter 2, quarter 3, quarter 4, or Q1, Q2, Q3, Q4, whatever you would like to call it. So we have endless cycles, but I've just wrote down the main ones that you're going to be focusing on, and not even these ones here are the main ones. These are like super high time frame, but they're just good to know anyway, just so you guys can get the concept inside of your head. So firstly, quadrennial cycle. This is viewed on the 1 month time frame. Keep in mind, each cycle must be viewed on its correct specific time frame. Like, you can't view, for example, the weekly cycle on like the 5-minute chart. It just doesn't work, right? Each chart, each cycle, each quarter should be viewed upon its correct time frame. So the quadrennial cycle is essentially each year being 1 quarter. Okay, so the cycle is comprised of 4 years, and each year is 1 singular quarter. The way that this works here, the way that this works here is every single election year. So US election year. So for example, we had 2024 last year was when Trump got elected. That would be our quarter 2. So that's the way that we find out which quarter we are trading within for the quadrennial cycle. So because 2024 was the election year, that means the previous quarter, the last year, was the start of the cycle. So Q1 was 2023, Q2 was 2024, Q3 was 2025, and Q4, I may have missaid one of those, but Q4 is 2026, as you guys can see right there, okay? So right now, the current year that we're trading within is Q3 2025, okay? Now for the yearly cycle, this is essentially each cycle, the name that it has in front of it is the higher time frame candle. So the yearly cycle would be more or less like the yearly candle that we're trying to capture, dividing it into quarters, okay? And this is viewed on the weekly time frame, and this is, divide the whole entire year, so 12 months by 4. So 3 months, 3 months, 3 months, and 3 months, okay? Quarter 1, quarter 2, quarter 3, quarter 4. So January to March, so January, February, and March are all Q1. As soon as we start April, we have April, May, June, all Q2. And then as soon as we start July, we have July, August, September, that's it, as Q3. And then as soon as we start October, we have October, November, December as Q4, okay? So currently, for a little quiz for you guys, which quarter are we trading within for the yearly cycle right now, guys? I give you 1, 2, 3. The answer is Q3, but it's soon to be Q4 because we're a couple of days away from October, as soon as October starts, the very first day, that means we are trading within Q4, which is that final quarter of the year. And think in terms of higher time frame candle. What does a higher time frame or any candle do towards the end of the candle? It creates that wick, okay, which we'll be diving into deeper very shortly. But just think, what's Q4 mainly used for? Okay, creating that wick of the higher time frame candle, right? Then we have the quarterly cycle. Now this is actually a very strange one. I wouldn't even like excuse me, I wouldn't even like sort of dive into it or like recommend you guys to check it out. To be honest, essentially what it is the one between the yearly cycle and the monthly cycle. And what it is each yearly cycle quarter, so January all the way to March, divide that 3 months into 4. It's very tricky. It's like gives you like 3.25 weeks each quarter. So we'll briefly go over this one. Again, I wouldn't even recommend diving into this one. It doesn't really have too much use. But that's how you would get each quarter essentially. So January, the first 3.25 weeks of January will be quarter 1. The second will be quarter 2, so on and so forth. Okay, we'll sort of go past that one though. We're not really ever going to be using that one or needing it. That one is though. Viewing the daily time frame, again, that's kind of tricky. Some people say 6 hours, some people say daily. They didn't really mention it too well, so do what you want with that one. These now are the main ones I look at, and I look at these every single day. I don't really look at these for indices trading as well. You don't really need these. It's more for like forex and other like markets like that. So monthly cycle, very, very important. This is essentially, like I said, the higher time frame monthly candle viewed on the 4-hour time frame. And each week of the month, you guys know, each month is comprised of 4 weeks, okay? So the very first week of each month is Q1, quarter 1. Second week is Q2. Third week is Q3. Fourth week is Q4, okay? Again, think in terms of monthly candle. What usually happens at the start of the monthly candle, or any candle in general, we'll put in that wick. Quarter 2, quarter 3 will be the bulk of that candle body most of the time, not always, and we'll dive into that as well, knowing when it is going to be the bulk of the candle and when it isn't. And then Q4 is the wick of that candle pulling back into the range ever so slightly, okay? So yeah, very, very important one to look at. Weekly cycle then is the weekly candle viewed on the 1-hour time frame. And again, very simple, Monday being Q1, Tuesday being Q2, Wednesday being Q3, Thursday being Q4. Excuse me, guys. Bit of a cough. So yeah, and then Friday, you're probably wondering why Friday isn't there. Obviously, there's 4 days there already, so there's 4 quarters. There can't be a 5th one, because that would be fifths, not quarters, right? So Friday actually holds its own function. And generally speaking, what that is to pull back into the weekly range or towards the true week open, which again, we will dive into later on. So yeah, with that in mind, we can still treat Friday as if it is like a regular quarter, but these are the main days that we want to be focused on, and that's why you'll sometimes find that Friday isn't actually as high probability, okay? Now we have the daily cycle. Again, super, super important. This is probably my favorite one, to be honest. And yeah, viewed on the 15-minute time frame, again, it's essentially capturing that whole entire daily candle. So if you can have an idea of what the daily candle is going to do, we can then use these quarters to really, really help us and find the best entries intraday. And the same goes for all the other cycles. If you've got a good idea where the weekly candle is going to go, you're then viewing for one of these quarters to manipulate opposing that. So if you're bullish on the weekly candle, you're then looking for one of these quarters to manipulate and then the following to distribute. And that's how you can really gauge price action on that deeper level. So daily cycle is the day split into 4, each quarter being 6 hours long. So Asia is that first quarter, quarter 1. So from 6 p.m. until midnight is the whole entire of Asia range. This is for indices. I know that forex opens at 5, I think it is. So you can do 5 till midnight will be Asia session. And then London opens up at midnight until 6 a.m. Again, that second 6 hours of the day. New York AM then opens up at 6 a.m. until 12 p.m. until the afternoon. And then the afternoon session, PM, opens up at 12 p.m. and then runs all the way until the day closes, which I think on indices it's around like 4:30 or something like that. But essentially from 12 till 6 p.m. is the whole entire of the PM session. So yeah, let me get rid of this taskbar. There we go. And then pull this back up. Again, I'm not really going to cut these videos, guys. It's just going to be super raw. So if you see a few things, just ignore it, okay? And yeah, so hopefully that does make sense for the daily cycle. Again, 6 hours each quarter, viewed on the 15-minute time frame, okay? So 90-minute cycles. This is now when we're going to go a little bit deeper. And my Discord is doing this. I know exactly how to fix this, and that should now be fixed. I apologize. So now the 90-minute cycle is going to go a little bit deeper. But the way that this works, guys, if you haven't already clocked on, is each cycle that is above us, you divide one of those quarters into 4 to get the cycle below. Okay, so the weekly cycle is comprised of 4 quarters, each day being 1 quarter. And the way that we get these 4 quarters of the daily cycle, the cycle below, is dividing one of these quarters into 4. Okay, so Monday Q1, if we divide that quarter into 4, we'll get, obviously, you know, a whole entire day is 24 hours. Divide that into 4, we'll get 4 6-hour sessions, which is these sessions here. 6 hours, 6 hours, 6 hours, 6 hours, okay? So we essentially do the same thing for the daily cycle down to the 90-minute cycle. So Asia is Q1 of the daily cycle, and it's 6 hours long. Divide that by 4, what do you get? You get 4 90-minute quarters, and then we can, you know, give those names as well. So the first quarter is Q1, second quarter is Q2, third quarter is Q3. Wow, this is getting tricky. Fourth quarter is Q4. That's it, okay? So Asia session, like I said, begins at 18:00, 6 p.m. and ends at midnight, okay? So divide from 6 p.m. till midnight into 4. You'll get 4 90-minute quarters. So 6 p.m. till 7:30 p.m. is Q1. 7:30 p.m. till 9 p.m. is Q2. 9 p.m. till 10:30 p.m. is Q3. 10:30 p.m. till midnight is Q4. And the same, like, all of this is fractal, right? All of this is fractal. So if we're bullish on the daily candle, we're using the daily cycle each quarter to know what the upcoming quarter is likely to do, to know when the manipulation has occurred for the day, right? So if we're bullish on the daily candle, we may expect London Q2 to trade lower, manipulate lower, right, for the daily cycle. So that then means we can utilize London's 90-minute cycle to actually potentially capture the manipulation of the day. So instead of trading that bullish daily candle higher, which I would recommend, by the way, you can get into the manipulation moves, which is opposing that daily candle. So if you think, for example, the daily candle is going to go lower into maybe a daily fair value gap first, you can still capture that move utilizing the 90-minute cycles, right? So if Asia accumulated, maybe you'd be expecting London Q2 to manipulate. So then you'd be looking at the London 90-minute cycles viewed on the 5-minute time frame for then manipulation of Q2. So manipulation higher to then manipulate lower on the bigger picture, on the bigger side of things. And then you can get into a short using the 90-minute cycle. And then, yeah, that's how you would sort of utilize that, right? Also, let me pull this up just for a slight moment, just because my webcam is blocking it. As you guys can see, those are the remaining quarters. I'm not going to read every single one of them out, but you guys know how it works now. If you want to feel free to screenshot that, you can go ahead and do so. But yeah, those are the timings. So screenshot that. There you go. Look through it. Again, while watching these bootcamp episodes, I'd really recommend to have a notepad and a pen, write down all the notes, use Notion, whatever you would like to do, because this is going to be very, very important. And you always want to look back upon your notes whenever you got any free time before you go to bed. And also feel free to watch these videos as many times as you need to understand the concepts, and don't move on to the next bootcamp episode without understanding the current one, okay? So the plan also is to upload sort of maybe 1, 2, if I have time, bootcamp episodes per week. I don't want to rush every single one out every single day, 1, 2, 3, 4. I want you guys to really understand the information first before we move on to the next video, okay? And by the end of the year, if you watch all the bootcamp episodes, you'll be able to start 2026 with a fresh new set of trading skills, and you'll be ready to absolutely crush it within 2026. Can't promise that, but I can tell you guys, if you put in the work using these videos, you will definitely be at that level for sure, because I did it. I am proof of that, okay? So, excuse me. So, wow, that is a really annoying cough. So now for the microcycle, again, it's just dividing each 90-minute cycle quarter into 4. So, when I say this, I don't mean the whole Q1, Q2, Q3, Q4 into 4. No, I mean each specific quarter into 4. So pick any 90-minute quarter. So for example, Q1 here is 6 p.m. till 7:30 p.m. That specific time window, 6 till 7:30 p.m. is 90 minutes. Then divide that into 4. And then you'll get the microcycle quarters of the Q1 of the 90-minute cycle. Yes, I know it sounds confusing, but we will jump into the chart soon and it will all make a lot more sense. So this one, for example, would be 6 p.m. The first quarter of the micro would start at 6 p.m. It would end at 6:22 or 23. This is technically supposed to be viewed on the 30-second because you can see the half minute, but you can still get away with viewing it on the 1 minute. It really doesn't make too much difference, and it's a lot easier as well than the 30-second. It can be quite fast. So yeah, 6 till 6:23, let's say, and then from 6:23, it'll be another 22.5 minutes. So then it'll end at, I'm not very good at math, but 23, 43, then it'll be like 46, so we go to like 6:46, then that will begin, and then it'll go from 46, another 22.5 minutes, etc, etc, and the final 22.5 minute quarters will get you to 7:30. Okay, again, you don't need to be using this one. I like to use it for 1 minute entries because I enter on the actual 1 minute or the 15-second chart, because you can then get a nanocycle, which is each microcycle quarter divided into 4. Because understanding the fractability, understanding the fractability of time, you can literally go as low as the 15-second, right? All you've got to do is know what one cycle quarter higher is gonna do. Like if I'm expecting the first 22.5 minute of the microcycle Q1 to be manipulation lower, for example, I can then utilize the one cycle lower, the nano, to look for manipulation higher on the nano, to then trade the distribution lower for this quarter here being, if I'm expecting this quarter to trade lower, then I can get into that move utilizing the nano cycle. Same works here as well. Like, let's just pick a random day. Like, say we're expecting Tuesday Q2 to trade lower. We're then looking for manipulation in one of these quarters higher to then take price lower. Okay, that's what we're doing. That's how you can trade the manipulation of the higher time frame manipulation leg, basically. Now, one more thing that I do want to show you guys here is a little screenshot, a little cheat sheet that I put together for you guys for quarterly theory. Okay, so let me make sure you guys can see all that. There we go. It is all in frame. Perfect. Now let's understand, now we've found out what the time cycles are, the quarters, the namings behind all of them, when they begin, etc, etc. Now we need to understand what each quarter function is, basically, right? So there's four, is it four? Continuation, reversal, five different things a quarter can do, right? Number one is a quarter can either accumulate, it can manipulate, it can distribute, let me bring this forward, it can continuate, or it can begin a reversal. Okay, so 5 different things. Write those down. Understand those are the different phases of price. That is the only things that can happen within price. So now our job is to identify which of those things has occurred in one singular quarter, the previous quarter, to anticipate what the upcoming quarter is likely to do, right? So let's just imagine this is the weekly cycle, which is viewed on the 1 hour time frame. Each of these quarters is one singular day of the weekly cycle. We know that Q1's Monday, we know that Q2 is Tuesday, we know Q3 is Wednesday, Q4 is Thursday. So AMDX means accumulation, manipulation, distribution. X here is either a continuation or a reversal, right? Now put brackets between, beside each of these ones here. The manipulation can be tradable. Like I mentioned earlier, we can utilize the lower time frame cycles to actually trade the higher time frame manipulation. So that's why that one is tradable. Distribution goes without saying. Obviously, we want to be trading distribution, right? Oops, almost knocked over my drink. And then X, continuation, reversal, is kind of like, can be a little bit 50-50. Like if you know exactly with high confidence what it's likely to do, then you can trade it, okay? And I'll be telling you guys how to anticipate either of those as well very shortly. So back to what I was saying. Let's go over the first sort of example that can occur within price. By the way, price isn't just tied to these two only, but these are the main signatures that will occur within price over and over and over. So Q1 accumulated, okay, very tight range. It didn't really break out of anything. Q2 then manipulated. You can trade this higher. If you're bearish on the weekly candle, you can trade the manipulation higher initially, the open high of the weekly candle. Okay, so you can trade this, and then you want to wait for a signature in price to show you that manipulation is over, which we will get into later within the bootcamp as well, how to confirm manipulation and how to trade it. And then once manipulation has taken place, the following day or the following quarter, remember this is fractal, this could be the London session and you might be trading the distribution of the AM session. This could be Tuesday and then you could be trading distribution on Wednesday, right? It's all fractal. This could be a 90-minute quarter, Q2 manipulating, Q3 distributing. In this example, let's just say this is Wednesday distributing lower. Q4 is then either a reversal or a continuation, right? And I did say I'll tell you guys when to know which of those to expect, okay? So here's a little tip. If Q3 or the start of Q4 hits a higher time frame key level, so what do I mean by this? A higher time frame gap, higher time frame liquidity, then we can expect Q4 to be the reversal, right? However, if Q3 or Q4 doesn't hit a higher time frame key level, expect it to be a continuation towards that key level, right? Understand that? Write that down, take note of that, okay? In this case, you can see it took sell side liquidity, and let's just imagine there's like a huge gap here that we traded into as well. That's why we offered a reversal. Also, do keep in mind, sometimes if the key level has been hit, instead of getting a nice reversal within Q4, you may also get a accumulation phase. So do keep that in mind as well. Not always the best to be trading Q4 unless it's super, super clean and obvious. Now let's jump into the second example, which is XAMD. So instead of Q1 being accumulation, because it won't always be, sometimes what you'll find is Q1 will continue from what the Q4 of the previous cycle, okay? So obviously we've got Q1, Q2, Q3, Q4. Once Q4 is over, that specific cycle has finished and then a new one begins. So then we begin Q1, Q2, Q3, Q4, okay? But let's imagine this cycle here, Q4 offered a reversal. Now imagine we're entering the new cycle. So let's say this is the daily cycle. This is one whole entire day. This is the PM session. Boom, price come to a close for the day. Now we start the new cycle. So the new following day, and we're going to be trading the daily cycle, for example. Now Q1 Asia may continue. If it lets me draw, that'd be great. There we go. So now Asia may continue higher for Q1 of the following, new daily cycle. Q1 goes higher, which is the X continuation or reversal, continues higher, so continues the reversal back higher. Then Q2, we can expect accumulation. So if we don't see accumulation during Q1, expect Q2 to accumulate, because Q1 formed a larger range, it expanded higher, continued higher, so then Q2 likely chops up, right? So this is Q2 chopping up. Then we need to still see some form of manipulation for this cycle. So then let's say Q3 manipulates below Q2 lows right there, and then we can expect Q4 to be the distribution back higher, okay? So hopefully that does make sense, guys. And yeah, like I said, we're going to be jumping into some chart examples very, very shortly, but for now I do really hope that all of that information has sunk in for you guys. Again, make sure to just go back and watch the video again right now if you don't understand this initial information. Excuse me. Because what we're going to do now is jump into some chart examples and show you guys this happening, not in real time, but back testing basically, right? So yeah, let's jump into the charts. Alrighty, so we're on the charts now. I'm going to be showing you guys 4 different examples. One on the monthly cycle, one on the weekly cycle, one on the daily cycle, and one on the 90-minute cycle, okay? And also, you're probably wondering, how can I view all of these quarters? Is there any indicators to use? The answer to that is yes. The free one, the one that most people use, the one that I used when I first started, is the one here by 2 degrees. So if you search quarterly theory, it's that one there, day quarterly theory by 2 degrees. Go ahead, select that, add that to your chart, and then you can customize which cycles you want it to show and all that type of stuff, okay? And you can see it'll show the sort of rectangular box at the bottom. The grey one represents Q1, the red one represents Q2, green is Q3, blue is Q4. You can also change the colours, whatever you would like to do turn on historical cycles to see previous quarters show up in the past for backtesting and stuff like that. However, if you guys would like to take it one step further, myself, I have my own private quarterly theory indicator. As you can see, the Oracle Insights QT toolkit. That will be linked below in the description. You can grab a 3-day free trial. After that, it's a small monthly subscription fee. But if you want to take it to that next level, if you want to, have easier backtesting sessions and be able to see everything a lot easier, then this would be a lot more, I would prefer this one a lot more. So if I remove the quarters, you can see here it shows like the quarters individually with the dividers, and there's so much more, the quarterly theory stuff inside of it. So if you would like to try that, check that out in the description. But if not, we can still stick to the free one. That is completely okay. So yeah, let's go ahead, and for the example of this video, we'll just use the free one because that's what most people are probably going to be using. Okay, so here we are on the 4-hour time frame. This doesn't matter what asset we're looking at, because remember, this works across all markets. It doesn't matter. In this case, though, it is ES. So yeah, we're on the 4-hour. Which cycle is that viewed for, guys? Monthly cycle, that is correct. So we are on the monthly cycle right now on the 4-hour time frame. So each of these boxes represent 1 week of the month. The first week, second week, third week, and the final week of the month, right? So in this case, what do we have going on here? What has Q1 done, right? The way that I like to define a continuation is if it breaks out of the previous cycle quarter's range. So what do I mean by this? The previous quarter from Q1 is Q4 of the previous cycle. Did we break out above it or break out down below it? If the answer is yes, I like to class this as a continuation quarter personally. If we fail to break the high and the low, I like to class it as an accumulation quarter. There are ways to actually know as well, which we'll dive into deeper within the later bootcamp videos. But for now, just use this sort of explanation here, right? So Q1 was a continuation, so X. So then what do we expect Q2 to be? Accumulation, so large range followed by a smaller, tighter range, accumulating price, building up buy side and sell side liquidity. Then Q3, coming into Q3, we can be looking for the high to get taken, for that manipulation to take place if we're bearish, or the lows to be taken for bullish manipulation if we're bullish. Okay, and remember, this is the monthly cycle, so the monthly candle. So find that bias. If you're bearish, look for Q3 to manipulate the highs, then trade lower. So Q3 manipulates Q2 highs. So this is then classed as manipulation quarter. So you can trade, the longs up to the high, and you can also get into a short after the manipulation has taken place. And I'll be teaching you guys as well also how to confirm manipulation has already taken place, so that way you can actually trade during the manipulation quarter, the move lower. But for now, we just need to understand how to actually identify the quarters for what they are used for. So manipulation here, if you didn't grab an entry there, that's fine. Remember, because we have the distribution quarter coming up shortly. Q4 in this case is D, because this was M, so manipulation followed by distribution. And as you can see, that final week of the month did offer a nice open high, low close for that bearish week. Okay, so very, very simple, very simple. Okay, so that's why it's very simple and straightforward. That's what I meant to say. And yeah, there's a great example right there. This is one whole entire monthly candle divided into quarters to best view price action. And this kind of little thing that I've got here isn't completely accurate. I think that's a little bit better. I just wanted to sort of show you guys it easier basically. But remove that, each quarter, 1 week of the month. Right, now we have a weekly cycle example. So this is on the hourly time frame. And yeah, this is one whole entire week divided into 4. The blank quarter that you can see is for Friday. We can still treat it as if it is a quarter, but it is slightly different. And I think I'll do a whole entire bootcamp episode just for that. But yeah, as you can see, Q1, Monday, Q2, Tuesday, Q3, Wednesday, Q4, Thursday. In this example, we have a XAMD sort of model going on here. So Friday, as you can see, we ran out Friday's high right there on Monday. So I'd class this as sort of like a continuation. We didn't really as if like break out the range as such, but again, like I said, there is something deeper that can kind of confirm this. But in this example, we took out the high. So yeah, we can class it as a continuation because it didn't stay inside of Friday's range. So then, as you can see, Tuesday did then accumulate. It took out Monday's low and high. Again, I like to class that as accumulation because it didn't break out of one side of the range specifically. It took out the high and the low, so it's still not getting anywhere. It's still inside of a range. So then we'd be expecting Wednesday, Q3, to put in that manipulation. and then we'd be expecting Q4 to give us that distribution, which you can see here. For the most part, it did, and then we got a small reversal back up into the range because we had taken out a specific low, which is the whole entire low that we put in for the week. So between every single day of the week, we took out that specific low, hence why we did pull back slightly after. However, we did still get, for the most part, distribution, right? And then again, it followed as well. You can see the following quarter gave that continuation lower. So this was Friday, gave the continuation lower. So like I said, we can still use Friday like a quarter. So if we got distribution within Thursday, we could then be looking for that continuation within Friday, which is what happened. So yeah, with that being said, X continuation, Q2 accumulation, Q3 manipulation, Q4 distribution. And most of the time, whenever you get an XAMD model, is usually when you'll see like sort of the middle of the candle putting in the high or low of the cycle, pretty much, right? So the high of the week in this case was Wednesday. This is when you get like that midweek reversal, basically. So the midweek, ICT reversal weekly profile is when this will usually happen if Q1 expands higher for that continuation and Q2 chops up. Then you see Wednesday higher low of the week. However, whenever we get sort of like a accumulation on Monday and during Q1 and then manipulation during Q2 is when you get that classic buy or sell candle, essentially, right? Because the manipulations occurring pretty early on within the candle, that wick's being put in, and then Q3 is that bulk of the candle and potentially Q4 as well. But in this case, we sort of open up high, we put in a wick, then we accumulate, then we run the wick again to put an actual high of the week with clear manipulation during one of the quarters, and then you'll get that reversal. So these type of candles here typically will have like the larger wicks either side and the smaller bodies, and then the buy, the typical buy or sell candles is when the manipulation occurs earlier on, and then you get a big, more bulkier candle body, essentially. So yeah, with that being said, now let's jump into the next example, the daily cycle. Okay, now let's jump into the daily cycle example, which is the 15-minute time frame, and this is capturing a whole entire daily candle divided into 6 hours each session. So as you can see here, Q1, this to me I would class as accumulation because it didn't take out Q4's low or take out Q4's high. So you can see it traded within inside of the range, and it is clearly just a very tight range accumulation sort of quarter as well anyway, right? So with that in mind, we're then coming into Q2 expecting manipulation to take place. If we're bullish on the day, we want to see it on the lows. So you can see here, Q2 does indeed manipulate below Q1's lows before then after then Q3 offering that distribution towards the upside. So Q2 manipulated, Q1 accumulated, Q3 is now distributing price higher. And then as you can see, Q4 is then sort of a continuation / reversal, which can sometimes happen as well. The time that you'd expect this to happen is, remember what I mentioned earlier, if the higher time frame objective key level has been hit, then for the first half of the quarter you may get the continuation, and then if it gets hit, then you may see a reversal take place in price. And remember, you can divide each of these quarters again into 4 for the 90-minute cycle, so that's how you can actually capture this move here as well, based upon the 90-minute cycle. So yeah, that is another sort of cycle shown right there. This would be the AMDX cycle: accumulation, manipulation, distribution, and a continuation / reversal. Now for the final example, let's jump into a 5-minute chart, and let me delete this background because that kind of blends in. And the one that we're specifically looking at here is also the tool that I'm using is this one. It's called Fib Time Zone tool, I think it is. Those are my settings. I don't use this at all. I'd prefer to use this indicator on my indicator. I'm just doing this so you guys can clearly see the quarters defined pretty much, right? So, we can do it this way as well. It doesn't really matter. Q1's range right there. We can do this one as a gray box. Not that gray. We need to actually be able to see it. There we go. So as you can see, another AMDX because we didn't take Q4's low or high. So Q1 is classed as accumulation right there. We can clearly see that within price as well. Q2 then manipulates below Q1's lows, and then Q3 offers the distribution, and Q4 is that continuation higher towards the higher time frame liquidity, the key level in this case. So yeah, with that being said, that is pretty much 4 clear-cut examples on the charts. Now it's your time to put in the work. Make sure you've taken notes of the video. Go back and watch it all again if you have to. Then just because you've learned the information, now go apply it to the charts. Go back test this information that I've told you guys. There is a lot more to it. It goes a lot more deeper, but this is the basics. So you need to get these down before we can move forward, right? So yeah, hopefully you guys did find this video useful. Hopefully you took value away from it. If you did, guys, I would really appreciate as much support on the video as possible. That shows me that you guys really want to see more episodes of the bootcamp and really will motivate me to keep going as well. Comment down below any other bootcamp episode video ideas you would like to see, daily bias, sequential SMT, PSP, anything at all. I've got a lot planned, but more ideas equals more videos. So comment down below, leave a like, subscribe. Check out my socials and my free community, link below in the description, as well as my premium membership group, my one-to-one mentorship, and both of my indicators, link below in the description. And with that being said, I appreciate all you guys for watching. Take care and good trading.